that don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD and Melissa.
Hi guys, welcome to the Real Estate Jam podcast. I'm JD with my wonderful and talented co-host.
Thank you, JD.
Awesome.
I'm going to talk a lot today.
I really hope so. And
Yeah.
why don't we start off with you introducing our guest?
Yes, this is our guest.
Arunabh Dastidar. He's the CEO and founder of RealSage. RealSage is an AI data management program that's going to help you make better decisions or help investors make better decisions based off of the actual data at a quicker rate than what it would take you to actually pull all your spreadsheets out and analyze the data. So we're super excited to have you on the podcast. And, we were talking before the episode started recording about all of the awesome things that RealSage is doing. And I'm hoping we can just duplicate that conversation so you can explain to our listeners who you are, where you're from, why they should listen to you. And then let's go into RealSage and share with our audience how it helps.
Thanks, JD and Melissa, for having me. I'm really excited to talk to you and all the listeners. I'll give you the short version of my introduction and then delve right into how we're helping and changing the way real estate makes decisions. I probably would be one of the most uniquely positioned person to talk about it because I've seen the entire life cycle of real estate from the built world to investments. My background, I basically went starting coding when I was in my teens, but by the time I'm in college, I realized that, okay, I know a lot of computers, so I don't need it in my engineering. So I ended up doing civil engineering in my college, where that was my beginning to the build world because I love physical buildings. That's something which you have built, which exists in real world. And that soon after my college, I really understood that, the position which I got into was bringing technology to that physical world from the very beginning. So I worked with some of the largest players you can think of in the industry in Asia Pacific, working in some of the largest public-private partnerships in Germany, Japan, and Southeast Asia, including Singapore, China, and understood the architecture of how slowly but surely this industry is changing towards a better understanding of technology as well as improving in productivity. And then I moved around, did my MBA, and actually worked with private equity in real estate investments, handled over $1 billion of assets in North America. And one fine day, I was taking a call on a $130 million deal, and my Excel sheets were crashing that evening. And that's where the pain really sunk in, and saying, that failure should not look like that for any other person in the industry. And I know a lots of people across the US are aspiring to have a real estate portfolio and have a good sense of the deals and not losing those deals because of the time crunch, because of not having resources. What RealSage does essentially taking that pain out of like bringing your data from disparate systems, bringing your deals from disparate systems into one single platform, and use the power of artificial intelligence and machine learning to simplify and analyze, visualize all those data at 10x the speed you can without the pain of the crashing Excel sheets.
That's very cool.
I think it's great. And one of the things that's kind of a common statement at a lot of our masterminds and a lot of the real estate events that we're going to is that real estate is 10 or 20 years behind most of the other industries when it comes to technology. And that's, I think that part of that is because the people who are doing real estate are just everyday people that are trying to make a better life for themselves. They start out small. Kind of the path of success is starting out with a couple of single family homes and then small multi, and then trying to build your portfolios, run into syndications, and build up in kind of a linear manner. And so a lot of the tech gurus and all of the marketing strategies and the analysis that all of these big technological companies are using hasn't really been applied to real estate in the same way as it has in other industries. So I am super interested in how and what kind of data points you guys are using in your system to help real investors analyze properties at a quicker way, help them understand and make decisions better. And then, I'm a little bit interested, it might be too technical for me to understand, but how are you guys getting a machine to be able to do what typically in our industry is somebody spending hours sweating over spreadsheets? So if you can explain to us a little bit about how it works and then how people are actually implementing it.
No, that's a great question. My day job was actually sweating on spreadsheets, like I mentioned, right? Like creating performas, looking at the deals, making sure my assets are performing to the IRR committed to my LPs. And our tool is, of course, used by some of the largest players across Canada. But the goal for us is to make decision-making so simple, so fast and efficient for everyone who is in RealSage. Think of us as the infrastructure. Think of us as the infrastructure for it. We are the car which can drive you miles, and you bring any kind of your own data. We provide that whole infrastructure layer, which the top 1% of the companies have in real estate with a fleet of data engineers and data scientists, and still are not sophisticated enough to mine their own data or external data points. So we provide that entire infrastructure where you can bring in, to answer your question, you can bring in demographic data, you can bring in your rental data, you can bring in whatever due diligence data you have into the system, and have the machine basically analyze, visualize those things much better for you and indicate the pointers. At the end of the day, all the performa models and everything, there's no secret knowledge. Anyone says like, okay, there is a secret sauce. There might be a few tweaks and your hypotheses that, I only make money if I invest in a property which is 5 kilometers from 2 bus stops. That's my hypothesis, and that's my secret sauce, right? You can bake those great hypotheses into your models, but at the end of the day, everything else is pure math. And that math is much faster and efficient for computers to do. And we know this for us since 1980s that computers can do better math than humans with much more efficiency and much more variables. So here, you can define the hypotheses, the model, the parameters you want to actually assess, and the system can quickly review for you, 20 deals you probably would end up working for in the next 6 months, within a month, so that gives you that competitive advantage to pick and choose what works for your secret sauce, what works for your portfolio, what works for you to grow your real estate business.
So with your platform, you're saying that I'm able to go in there and say, hey, I need it to produce this kind of cap rate, all the ones that are producing this kind of cap rate, I need it to have a vacancy of less than this amount. And then it whittles it down and shows you, hey, these 3 properties meet that base criteria. Now you go and look at what your offer can be. Is that
exactly? So that is one of the, that is of course one of the things. So we work throughout the funnel of real estate. So if you're a capital allocator, you do that. Basically, you bring in, you're probably subscribed to some data set in the neighborhood. Maybe it is a rental data. You have the access to, some sort of demographic data. You can bring those data sets in. Set your benchmarks and see and look at, okay, these are all the deals I'm looking at. These are my cap rates. This is the vacancy. Show me which fits this criteria. And then you can delve deeper into that platform using that. So that's the first level of the life cycle. The platform is used by asset managers and ownership groups to regularly combine external and internal data factors. So just to give you an example, see your internal data from your own systems getting integrated, pulled into the system, and you're seeing there is a decline in rental revenue in a portfolio in Florida. What's going on? And then you can bring in the external data of rental and say, oh, there is COVID happening, right? So that's why it's not only me who is screwed, everyone else is screwed. And the AI is able to pinpoint the buildings which are underperforming or performing really high so that you can optimize your marketing directions, your leasing directions, your capital expenditure. So which buildings, what is the trend in the market? Does a lobby with the great wooden flooring works for my building in this neighborhood? How would you know? How would you spend the next dollar on your building to make it more efficient to the ROIs you committed? And you can do that on the platform and bring any disparate data set and use the infrastructure to do it, which earlier or at this point would require you a fleet of analysts and data scientists to actually start giving you the results for.
That's super cool.
Sure. Yeah. And so with your typical customer, how big do you think that, how many doors in their portfolio, and how much data, would somebody need, or how many, obviously my lack of knowledge on your system is giving me a little bit of trouble here, but what's the average portfolio size on one of your clients? And then would it be the same concept? Would it be beneficial to somebody who, say, only had 20 doors or only had 5 doors? Are you able to, obviously the more data points you have, the better the analyst will be, but what's the level of investor that your system is most beneficial for?
See, I'll be really, be direct on this. I personally am a very big proponent of, if you don't need engineering, don't do engineering. So if you have a 5 door portfolio or a 10-door portfolio, you don't need all of this. You're good. Right. You need to focus on, there are a lot other more priorities which you should focus on and you should work through. Our typical customers are medium to large scale. Our typical customers have over 6,000 doors under management, but there are areas there are few really savvy investors who understand and have 100 plus doors portfolio where it starts making sense for you to 70 to 100 properties, not doors, 70 to 100 properties portfolio, which starts making sense for you to really optimize. And they have pushed for more data driven decision making, which gives them edge over these other institutional players in the same market which they're playing on, right? How to maximize my revenue by pricing my unit right at the right point in time. Very, very important use case. A lot of medium size or growing asset ownership groups and operators fail to actually price and time the market right, which ends up for them, ends up losing significant amount of revenue because the person is in their unit for a longer period of time. We operate in few of the markets which has rent control, like New York and Toronto, where missing that boat can lead to like years of like loss of revenue and like going through courts to get the evictions done and things like that. So there is a significant chunk. So we have few of those early growing savvy good asset owners who are looking to grow really fast, use our platform. One of the players last year saved over $400,000 in their NOI, improved their NOI by $400,000 at that category. And I feel really, really excited and proud about what we have been able to do for that segment of ownership groups as well, right? Who are looking to grow their portfolio from 70 to 100 units, be better at their operations and management. And some of the individual owners we have also seen, they're localized players in markets like Nevada, markets like Florida, where they push their property management groups. So they have done the allocation using the platform. That's of course the best use case, and you can think of on that level. But they have pushed their property managers who are managing the properties on their behalf to use the platform, where this group of investors are getting benefited overall by the improved efficiencies of the management, using the power of latest technology, AI, and machine learning over there.
Sure. Yeah, that makes a lot of sense. And I think especially when you're talking about portfolios that are that large, just, if you change something and make a change that's predicted by AI of $50 a month per door on 6,000 doors, that's a significant change to your income, which then translates to your NOI, which ultimately translates to the overall portfolio value and your ability to resell it. I do think there's some benefits to that are huge, and that's the direction that the entire world is going, more technology-based, data-driven. That's why Facebook and Twitter and all these companies are getting in so much trouble for reselling the data, because it's so valuable. Now, if we were trying to break this down to simpler real estate investors, obviously they can't go and use all of these AI tools to figure out how it helps them with a single family home. But there are some important pieces that the data that they could be pulling. What do you think the most important data points are if you were going to do these manual spreadsheet looks up? What's the most important thing that investors could be looking at on the smaller level?
Right. So I would allude to the most common answer here. It depends, because there is no single right point to know, because it would depend on market. Like North Carolina currently is like really a hot market. Everyone is moving towards it. A lot of external factors drive it, right? Like, so you can look at what is changing in those markets in terms of from cap rates to interest rates to, and we are in a, the JOLT report came out, we are in a very different market. Fed is indicating, few quarter points up, right, over the next 6 months or so. So we will see a lot of different data points, which depends on what you are looking for in terms of investing. So now let's distill it down to the point: what are the use cases where these individuals can benefit out of? So most of the times, which I have seen personally, you only analyze deals which you have access to. But having a actual use case of this is what I'm looking for, having a longer term hypothesis on your portfolio definitely helps. So your hypothesis could be around gentrification. So you can look at external data point so the biggest use case I'm talking about is acquiring and growing your assets. So we have something called RealSage Grow, which helps you in growing your asset class, what you're looking at. So you can see what kind of assets had made money for you. you can distill their data and see, okay, these are the factors, and that our system can actually point out. These are the factors. These are the age of the building, how much money you're using in renovating or upgrading that building, how much basically a simple thing like insurance costs on it, right? And how much your utility bills are. So you can look at those and see, in these neighborhoods, my overall hypothesis is I want to invest in the areas where young professionals exist. So you should look at what demographic hypothesis is there. So that's a big KPI for your investment. You can look at what is your capacity in terms of managing or having an asset class which has like a higher bill or higher expense class, right? So that might be one of the things. So what are your cost structures look like? And then what is the future revenue potential? So it might be, currently what's your rents look like, but in our system, you can also predict and see 3 years down the line, how does the disposition or acquisition looks like in this area? So if you're, and a lot of people are doing that, if you're looking at not a single family home, but looking to do a short assembly and put together a small multifamily unit, that is a very important data point to look at, that how that, what's the time series of the rental growth in that area, and what's the time series of the cash flows that the area is performing. So, like to my point, it depends, but of course, the external factors of what you're looking at, your revenue potentials and your cost, are the top three things.
Right. And so the way that I understand that, the way that we would look at that in our business is identifying your wins, identifying your losses, and then re-engineering them to find other properties that fit. So to stay away from all those properties that we've bought that were 1940s that were losers for us.
Exactly.
Start attacking the ones that were 1985 and newer, because those are the ones. And then each category gets down so that you can essentially build your perfect ideal buy box. This is what works. This is what to stay away from, and run it like that. And I think the important part to mention is that this is in your system and rooms full of data analysts is what the biggest real estate investors in the country are using to make informed decisions faster than their competition. They're finding an inefficiency in the market and then trying to exploit it for their personal gain. And that's the same thing that you need to do when you're first starting out. That's the same thing you need to do when you have a 6,000 unit portfolio. And
that's right.
Your system, your platform is helping some of those bigger guys make those decisions with less time. And everybody knows in the real estate world that time's money, and time can kill or make a deal.
That's right. That's right. I feel like, last week I was invited to a panel, and I was telling this, everybody says real estate is slow, like in the real estate as an industry is slow. And I feel like the slowest portion of that real estate is decision making, right? How much we have in terms of rental PDFs is just like insane amount of things to look at before you really decide on where you go for, right? And removing that friction layer on that decision making can eventually, and that's the mission we're working towards, that how we take this industry from $43 trillion industry to $120 trillion industry over the next 5 years, by removing the friction from that decision making so that deals can move faster, so that people can decide better, and buildings can yield better as well.
Sure. So if people in our audience are interested in what you guys are doing over there, and if it applies to them, where they can look more about you, your company, and what you guys are doing, where can we send them?
You can send it to our website, realsage.com. It has a big button, request demo. My team would be happy to show them the demo of how the product can be utilized, talk through their use cases, and they can directly reach out to me on my LinkedIn profile at Arunabh Dastidar. They can also, ping us on our LinkedIn page at RealSage.
Awesome. Well, thank you so much for coming on the show today. We really appreciate it.
That was great.
There's a lot of good information that is applicable to large investors, small investors, and everybody in the real estate world.
Thank you.
Thanks a lot. Thanks a lot, JD. Thanks a lot, Melissa, for having me.
Awesome.
Thank you for listening to the Real Estate Jam. We hope you enjoyed today's episode. For more information, check out our website, therealestatejam.com, or find us on Instagram, Facebook, and Twitter at The Real Estate Jam. If you have any questions, feel free to drop us an email at therealestatejam@gmail.com. See you next episode.